You are listening to the Objects of Affection collection, Study 60, Why Traditional Luxuries Route Marketing Fails to Purchase Moral Capital. The global luxury sector is currently staging a simulacrum of resistance, a frantic, industrial-scale performance of ethics designed to obscure a fundamental epistemological collapse. This resistance is futile, as evidenced by the 12% contraction in high-end market value reported in the Art Basel/UBS survey of 2025. We define this counter-strategy as route marketing, the commodification of origin stories, the quarry, the atelier, the harvest, deployed not to reveal truth, but to manufacture a flawless alibi for continued extraction. This report argues that legacy houses, LVMH, De Beers, are engaged in a zero-sum pivot that they cannot survive. They attempt to purchase moral capital through the fluff of traceability apps and greenwashing campaigns, while structurally refusing to bear the cost of intention. Drawing on the Objects of Affection collection, post-luxury conceptual functional art framework, and rigorous critical theory from Baudrillard to Foucault, this study exposes these initiatives, from LVMH Life 360 to De Beers Code of Origin, as performative ethics. They are spectacles of dissent that simulate stewardship while maintaining the speculative model of infinite growth. By analyzing recent supply chain scandals, the hollowness of intentionality marketing, and the repair horror stories that belie the myth of heritage, we validate a harsh reality. In the post-growth economy, value is no longer found in the flawless geometry of the commodity, but in the fissure of the custodian's contract. Any brand refusing to adopt quantified moral capital, MWPM, is merely selling a luxury that is, in fact, a toxic liability. The anatomy of route marketing, a simulacrum of authenticity route marketing. The industrialization of the grassroots route marketing is not a genuine return to source. It is the corporate co-option of grassroots authenticity, a strategic deployment of origin to mask the alienation of the product. It is a defensive mechanism triggered by the crisis of the real. As the sign value of luxury erodes amidst dupe culture and digital reproduction, brands are desperate to anchor their floating signifiers in the dirt of the real world. However, this dirt is sanitized. It is the aestheticization of extraction. Brands like Cartier weave narratives around the humble coffee bean for their Grain de Café collection, elevating a commodity crop into a motif of royalty, effectively stripping the material of its labor context to serve a fantasy of mid-century glamour. This is the definition of fluff marketing. The story is a varnish applied to conceal the industrial machinery beneath. The narrative of the route is used to justify the premium price. Still, the reality of the route, the miner, the farmer, the ecological cost, is erased by the flawless geometry of the final campaign images. The intentionality trap, managing the signal a key weapon in this simulacrum, is the rhetoric of intentionality. Intent became a signal to be managed by luxury consultants rather than a moral precept. Brands claim their sustainable lines are born from a deep intention to honor the artisan. Yet, as critical analysis of the celebrity consultant economy reveals, this intention is often a template provided by risk-averse managers who prioritize the Instagram grid over genuine structural change. This is performative ethics at its most cynical. Intentionality in the corporate luxury context is merely a simulacrum of resistance, a way to perform care while maintaining high-velocity sales. This approach is already failing because 74% of millennial and Gen Z collectors now prioritize purchasing art and objects that reflect their personal values and beliefs. UBS, 2025. The cost of intention, the actual sacrifice of profit for principle, is never paid. Instead, it is marketing copy designed to reassure the consumer that their consumption is thoughtful, allowing them to continue buying without guilt. The flawless geometry of greenwashing. The aesthetic logic of route marketing is flawless geometry. Whether it is the exacting tolerances of new marine yachts or the flawless geometry of Art Deco jewelry, the industry is addicted to the visual language of perfection. This aesthetic neutrality acts as a white wall, blocking out the messy reality of production. This obsession with flawless aesthetics renders their sustainability claims ontologically void. You cannot have flawless geometry and ethical truth simultaneously, because the truth of the Anthropocene is scarred, broken, and traumatic. When brands present a clean supply chain, they are engaging in greenwashing. Recent class action lawsuits against brands like Lululemon for their Be Planet campaign expose the fragility of these flawless narratives. The gap between the marketing fluff of environmental restoration and the hard data of rising emissions is a legal liability. Luxury's attempt to whitewash its supply chain into a geometry of circularity is a deception that the moral weight metric immediately exposes. The theoretical void, the lie of heritage and stewardship, the repair simulacrum. Horror stories from the atelier. The most damning evidence of route marketing's failure is the industry's refusal to honor the custodian's contract. Traditional luxury sells the myth of heritage and heirlooms, implying a commitment to the object's longevity. But the reality is a warranty of obsolescence. Investigative reports and consumer testimonies reveal a repair horror show at the heart of major luxury houses. Customers engaging with service centers for brands like Hermes, Rolex, and Lange & Sirhan report astronomical costs, months-long wait times, and most critically, the unauthorized replacement of vintage parts with new ones, effectively sterilizing the object and destroying its historical value. This is not stewardship. It is thanatopolitics, the politics of death, applied to the object. The brand wants the object to remain a flawless signifier of the current collection, not a living historical artifact. They kill the vintage object to resurrect it as a zombie commodity. This stands in direct opposition to the post-luxury conceptual functional art custodian's contract, which mandates functional endurance and imposes a legal duty on the owner to maintain the integrity of the fissure, the scars and history that give the object its moral weight. This concept of durable value is deeply explored in the study on functional endurance. The right to repair as resistance. While the right to repair movement gains momentum, luxury brands fight to maintain a monopoly on service, citing authenticity as a pretext to restrict access to parts. This is a control mechanism, not a quality control measure. It is designed to keep the consumer tethered to the brand's ecosystem and to force upgrades when repair becomes economically punitive. By fighting the right to repair, luxury brands admit that their business model depends on planned obsolescence, even if that obsolescence is psychological or service-based. They sell products with expiration dates, whereas the post-luxury philosophy sells commitments with infinite duration. The hollow circularity of LVMH and Peers initiatives like LVMH Life 360 are textbook examples of the simulacrum of resistance. They use the language of circularity and regenerative luxury to mask a linear extraction model. In 2024, Italian prosecutors investigated LVMH supply chains, uncovering sweatshop-like conditions and illegal labor practices at suppliers. This fissure in the white wall reveals the truth. The flawless bags are produced by flawed systems. The circularity claims are often statistically insignificant pilot programs or capsule collections that serve as PR shields, fluff marketing, for the massive volume of virgin production. As the Kearney CFX 2025 report notes, while circular intent is widespread, execution still lags, and most brands are stuck in the moderate zone of performative compliance. Quantified moral capital. The death of fluff MWPM, the metric that kills greenwashing. The era of storytelling is over. The zero-sum pivot demands data. Moral weight per material MWPM is the scathing metric that exposes route marketing. Traditional luxury goods score near zero on this metric. Labor, often obscured or sweatshop-based, low value. Trauma, sanitized by aesthetic neutrality, low value. Velocity, high flipping rate encouraged by the brand, high denominator, equals low MWPM. Route marketing attempts to artificially inflate the numerator with fluff stories about the quarry or the sound of the clasp. But MWPM reveals that a traceable diamond with a high speculative velocity and no binding stewardship contract is essentially a moral junk bond. The full application of this metric is detailed in the study on quantifying moral weight. The anti-commodity commitment, AC, vs. the liquidity trap. The industry is terrified of the anti-commodity commitment, AC. The ACC demands that value be locked into the object, preventing speculative resale. Luxury brands, conversely, market the investment value and resale liquidity of their goods as a primary benefit. This creates a liquidity crisis for their moral claims. You cannot claim to be sustainable keeping items in use, while simultaneously encouraging a resale market that treats bags like stocks to be flipped. The secondary luxury market is not a circular economy. It is a speculative casino that accelerates consumption cycles. The ACC destroys this casino. Toxic philanthropy and the grassroots lie. The grassroots marketing strategies employed by agencies for luxury brands are a co-option of activist language. They try to simulate a movement, but real movements have moral weight. Fake movements have marketing budgets. As seen in the toxic philanthropy cases, Sackler Canda's, the market is beginning to punish this dissonance. The business pincer is closing, Brands that rely on fluff to hide toxic capital will find their assets stranded. The code of origin is not a shield, it is a target. Case studies in failure: the origin lie. De Beers, the code of origin as a broken mirror. De Beers' code of origin is the ultimate fluff product. It promises traceability but delivers aggregation. As industry analysis reveals, the code of origin often leads back to a mix of mines, Botswana, Canada, Namibia, South Africa, making it impossible to pinpoint the specific root of a single stone. It is a general vicinity marketing claim masquerading as provenance. Furthermore, the code of origin is a defensive moat against lab-grown diamonds, which are destroying the scarcity myth. But the market knows the truth. Traceable natural diamonds have terrible resale value compared to their retail price, often losing 50% or more immediately. The code of origin does not protect value, it only protects the brand's margin. It is a simulacrum of value. LVMH. The Life 360, smokescreen LVMH Life 360, is a masterclass in spectacle of dissent. They announce biodiversity goals, regenerating 5 million hectares, while their supply chain is raided for exploiting workers. They tout repair services while making them economically unviable for the average client. The dissonance is deafening. LVMH uses sustainability as a luxury attribute, a gold star to justify price hikes rather than a structural imperative. It is greenwashing at the highest level of aesthetic neutrality. Tiffany & Co. / Cartier. The narrative gloss. Tiffany's Diamond Craft Journey and Cartier's Grain de Café are essentially literary fiction. They are beautiful stories told to distract from the commodity nature of the stone. Tiffany's Journey reveals the country of crafting, but often stops short of the specific mine for smaller stones, and certainly ignores the political economy of the trade. Cartier's romanticization of the coffee bean is a colonial fantasy, replayed as nature appreciation. It is the fetishization of the clasp and the flawless geometry of the design that silences the material's history. These are not roots, they are stage sets. The precipice of irrelevance. The traditional luxury industry is not pivoting, it is stalling. Root marketing is a stalling tactic. It is fluff marketing designed to buy time for a business model that is structurally obsolete in a post-growth world. The zero-sum pivot allows no middle ground. Option A: continue the simulacrum of resistance, root marketing, Life 360 code of origin. Result: moral bankruptcy, legal liability, greenwashing lawsuits, and eventual market rejection by the post-growth citizen. Option B: accept the cost of intention. Adopt the custodian's contract. Embrace the fisher. Result: quantified moral capital and survival as a true cultural institution. Legacy luxury has chosen option A. They are betting that the spectacle will outlast the truth. This report concludes that they are wrong. The fissure is opening and fluff cannot fill the void. Authored by Christopher Banks, anthropologist of luxury and critical theorist. Office of Critical Theory and Curatorial Strategy, Objects of Affection Collection. This has been a study from the Objects of Affection Collection, a critical art research institution operating under the framework of post-luxury conceptual functional art. Read the full research at objectsofaffectioncollection.com.